Hey, it's Dario and this is Coffee with the Markets, but without coffee this time because I already drank a coffee today, and if I drink another one I will probably die from a stroke. So let's see the news for this week, and this week I want to talk to you about the 2020 recession that everybody is talking about, which I don't even know if it's going to happen in 2020 recession, but if we want to call it that, we will call it that, okay? Hey again, it's Dario and this is Divity, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. So let's talk again about the inverted yield curve. We already talked about this the last week, but I want to refresh your memory. So we're really near the reversal. I see many people saying that we have already reached the reversal, but it's actually not true. At least if we talk about the 10 and 2 years bond or treasuries from the US, it's not happened still, okay? We are at 0.01, so it's pretty safe to say that it's going to happen. Yeah, it still didn't happen, but we can say that it's like it had happened because the 0.01 spread is so low that it's like it's negative, okay? Another thing that is negative is the growth of the GDP in Germany. I mean, we have a negative growth in the second quarter of 2019 of growth in the German GDP, and that's really bad for an economy because it's Germany. I mean, it would be one thing if we meant Italy, okay, that it's struggling, and we know it's struggling in Italy, but Germany, I didn't expect that from Germany. But yeah, so what I want to point out here is that if there is going to be a recession, I don't think it's just going to touch the US. Of course, the US is a really strong market and a big market. So apart from the German GDP, the recession in the US is probably going to touch the rest of the world. But with the German GDP decreasing, it's actually worse, at least from Europe, okay? But again, we can talk about recessions and 2020 recessions as much as we want, but we still cannot predict a recession. I want just to point out this because I see many people trying to predict the recession, also many economists trying to predict the recession, but not even if you study 10 years economics you can predict a recession because nobody predicts the future. I'm not saying that people who study economics are dumb and they don't know what they're talking about. I'm saying that they cannot predict the future, okay? I just want to point out this because we have seen many headlines in the past years, okay? We've seen a recession in 2013, recession coming in 2014, recession coming in 2015, and so on. So headlines are going to come every year for the next year, and at one point they are going to predict a recession, okay? Because if you say every year that the next year is going to be a recession, you will probably get it right at one point. So newspaper just keep posting the next recession, when it's going to happen, and at one point you are going to be right. Also, we can talk about the Fed that says that it's probably not going to keep cutting the rates, the interest rates, and that's a sign that they don't believe that it's going to be a recession in the nearest future. Of course, the rates cuts are usually lagging a little bit, so normally the recession starts and then after a few weeks, a few months, the Fed starts to cut rates and central banks start to cut rates. Apart from this, I don't personally really care when it's going to be a recession because I have my rules, I know what I'm doing, I know what I will do, I have my retirement plan, I have my accounts and all of that, so I'm not worried, okay? Also because I'm so young, so I don't have a house, I don't have family, I don't have to pay anything, so... But now, let's talk about what you should avoid doing during a recession. The first thing that you should avoid is panic selling. Don't sell your house or don't sell stocks or don't sell your investments just because you think it's going to be a recession, and even don't sell it just because you see price dropping. You have to really be careful here. If you panic sell, that means that you invested more than you can lose. Just be careful about this. Prices going down, it's not a disaster, okay? We have seen recessions in the past. The economy always grew back to normal after a recession, and as I said in a previous video, a recession is normal. We are always going to see recessions every now and then. We cannot predict them, but we are going to see recessions every now and then because the market that we constructed, the economy that we constructed is based on cycles. Also, what you should avoid doing is buying single stock while they fall. A recession is not a good excuse to buy crappy stocks that are falling down, okay? So if you see a stock, if you have a stock portfolio and you are not sure about what you're doing, so if you're not a true professional, don't use the price falling because of the recession as an excuse to average out the price, because you are going to end up losing money even in the long run. The stock market, it's not a discount, it's not a grocery store. You don't go there to buy things that you already need and you want to get them at a sale because you don't need stocks, okay? You buy stocks because you want to make a profit. Because of that, you cannot buy stocks thinking that they are on sale. I know there is a specific type of investments which is called value investing, but you need to know what you are doing and you need to know what companies you are investing in. Not all the companies that you choose are good companies, and not all companies that you choose are going to grow after a recession. Many companies will go bankrupt and you will lose all your money. And average down the price is the recipe to destruction. You can average out the price when you have an index, when you have ETFs, or you have a strong stock portfolio which is diversified. In that case, if you know what you're doing, you can average out the price because you know that in the long run, those funds, those ETFs, those portfolios that you build are going to make value and are going to grow back again to the previous values. But if you are not sure about that, so if you not have indices, don't average out prices just as an excuse to buy crappy stocks. I've seen many portfolios of people that bought and bought and bought stocks as they fell. Look at, for example, Tiscali. We talked about this in previous videos, one of my first videos, okay? Tiscali is a crappy stock. It started to follow back years ago and it's falling right now. It lost more than 90% of its value. Do you think that it's a good investment just because the price is cheap? Well, it's not, because the price of a stock can get cheap until the company goes bankrupt. So just be careful about that. Another thing is to follow your rules. Of course, when you invest in the stock market, whether you invest short term or long term, you have to have a precise rule about the stocks that you buy, and also, especially this, you have to have a rule, an exact rule that tells you when it's time to stop, when it's time to take the loss and get out of the market. Because again, not all stocks you are going to buy are going to be good stocks. Companies can fail and companies can file bankruptcy. So don't think that all the stocks are going to grow back to the previous numbers, and follow your rules. If you don't have rules, precise rules about investing, especially in single stocks, you shouldn't be investing. And so take the time of the recession to think about your rules and to make precise rules. The last thing that you should be avoiding is to be scared, and this connects a little bit to panic selling, okay? If you are investing long term, and you should invest long term, I'm not saying that you should only invest with a long term system, but invest long term means that you want to see profits long term, okay? Maybe you held a stock for just 1 week, but you want to see profits from here to 1 year, 2 years, 3 years, 5 years, not in 1 week or 1 month. So if you invest long term with a long term mentality, just don't be scared. Again, as I said before, as I said many times, recessions do happen and the markets usually get back to the previous values. So just don't be scared. And the last thing that I can tell you now, it's something that you should do, is to study. A recession is a very good time to study because you are not going to find the many opportunities on the market, because you shouldn't buy stocks when they fall. So you are not going to find good opportunities for long positions. So it's a really good time to take books, to buy books. Maybe they are even cheaper because of the recession. So buy books and study. You have plenty of time. Maybe the recession will last 1 year or 2 years. Well, take that 1 year, 2 years to study the markets, update yourself on what you want to update, maybe even study for your work. Take the time that you would have put into investing and use that time to learn about your work. Maybe you are an engineer, for example, and you want to update yourself, you want to update your resume. So there is that. You can take the time to study, whether investing or something else, okay? Take the time, take a little bit of time off investing, and come back when there are going to be opportunities. Of course, always have a little eye on investing on the stock market. But yeah, as I said before, don't buy stocks when they fall. Buy stocks when you see a good opportunity that respects your rules of investing. So there is that. Of course, these are not financial advice. I'm just 20 years old. I don't know anything about life. But if you are a professional, I don't even think that you're going to watch this video. If you're not a professional, just follow your rules. Don't be scared. Know that a recession is normal. Don't listen to me for advice, because this is not financial advice. And so yeah, this is all I had to say for the 2020 recession that everybody's talking about. And so if you enjoyed the video, please leave it a like and let me know in the comments down below what you think about the 2020 recession. Is it going to happen? What are you going to do in the 2020 recession? Let me know in the comments down below, and I'll see you in the next video. Hey, it's Dario and this is Coffee with the Markets. And today I wanted to talk to you about what it's maybe coming, a recession in Argentina. And also I would like to talk to you about the situation in the US, because are we going to see a recession also in the US?